IDFC First Bank's board has approved a fundraise of up to 7,500 crore rupees from two of its investors. We spoke to V Vaidyanathan, MD and CEO, about the fundraise and next stage of growth for the bank.
We felt that the bank will need capital for the next phase of growth because the phase one is what, let me say, was a setup stage. Still setup stage, but next phase we can move over to profitability in a very meaningful way, and we need capital. From that point of view, frankly, I spoke to maybe one or two more people also, but these people, I know them for like 10, 12 years now. I have confidence in them. They are like wonderful people, and RDA, of course, is a iconic institution.
Mr. Vaidyanathan, Sajit here. In the last 3 years, you have raised almost 14,000 crores. It's a huge dilution which is coming on your equity as we speak, and at every time you have raised funds, if I can take some of the numbers, 95 rupees you raised 3,000, last year at 80.63 you raised 3,200, and now at 60 you're raising 7,500. 14,000 odd crores and at a declining price. The shareholders will be a little worried, saying that you're diluting very fast and at a price which is lower than the last raise.
No, before that also we raised two.
I'm talking about just last 3 years alone.
I know. I'm saying over and above that, prior to that, we raised at 57 also. We raised at a lower price than that also. We raised at multiple prices. But the good news, Sajid, is that all of these raises have all been above book value per share. All. So every one of them adds to book value per share because you're giving new shares at a higher price than the book value. So net, the book value per share after this transaction will touch close to 53. But that's one point. That's one part of the story. Now, I think a more fundamental question should be that why you're raising capital, so much capital, why you're raising so frequent capital? Is that the question simply?
Yeah.
Yeah. Now, I need people to understand this basic fact that if you look for a bank which is like 35 years in existence, they're already running to peak profitability. So their capital is almost equal to the return on equity. The growth is almost equal to return on equity. They can keep on forever. But for our bank, starting from zero. So for a bank which has a zero return on equity to start with in 2018 or 19. So, right now, let me call it around maybe 7-ish or so, if you take out MFI impact. So your return on equity is 7, growth is 20, the gap has to come from capital. But the good news is that 0 has moved to 7. We believe 7 will come to 15 or 16 also. But it's a phase. Early stage bank, every bank starts low and then becomes, bank like ICICI or HDFC. Think about how ICICI raised capital 20 years ago. They raised $5 billion in 2005, $3 billion, something like that in 2005. That's one of the capital initial stage people raise.
The capital raised by those banks has not been on a yearly basis and at a price which is, declining in that sense, right? So that's the worry.
That's not a fair question. If you go back and see, say, ICICI Bank, etc., 2005, 2007. So imagine that time, like 2007, to raise $5 billion. I'm not referring to ICICI Bank, another bank. The point I'm trying to tell you is that early stage bank needs capital, short answer. You just need capital because return on equity is lesser than growth of the bank. But the good news is, like I told you, it's coming at a premium to the book.
Mr. Vaidyanathan, just a quick question around the OPEX side of the story, because that is one complaint that a lot of analysts have been pointing out, that the bank, yes, over the course of this financial, FY25 at least, you've seen that OPEX trend down, at least the OPEX growth trend down. It is still higher, of course, but the rate might be slowing down. I want to get a view, is this also one of the reasons why you would need a more capital infusion?
I think, Vishnu, you're connecting something else to something else now.
Sure.
End of the day, your return on equity is lesser than the growth of the bank. That's it. Now, as far as OPEX is concerned, it is coming down. This quarter's results yet to come out. So don't take me in a direction where I have to reveal this quarter's results.
Yes,
so please,
of course.
I can't go there. That is not the agenda of this discussion. We are talking about capital raise in this context, but this is nothing as simple as saying that return on equity is less than the growth of the bank. But the good news is, let's focus on why do such seasoned high quality investors want to invest 7,500 crores? Let's be clear about that. So there is some reason, right? And I believe that if they are going to make money in this transaction, I hope they do, then everybody makes money.
Okay, just one point of addition. So the investor presentation that you released to the exchanges that points out that one of the goals is, of course, to fund the next phase of growth, as you have already said in this interview as well. One line caught my eye: 20% over the next few years. What is giving you that confidence? Because not very long ago there was a lot of caution in the Indian banking system.
No, if you see our bank, the first 3 years we did not grow the loan book. First 3 years. 2019 we merged, FY19, 20, 21, 22 we did not grow. There's a reason, because we had a very high credit deposit ratio and a very high credit, like 169% credit deposit ratio, including corporate bond issuances, and we thought that 136%. So if that's high credit deposit, we could not give any more credit. We did not want to give, and we grew deposits the first 3 years. But that phase is over now. Now our credit deposit ratio is incremental lending only 75. So we can afford to lend. So now we're in the growth phase. So I feel that 20 is not like a big deal for a bank which has so many capabilities. Main thing is asset quality. If asset quality is good, you can grow. And our asset quality, gross NPA is less than 2, net NPA is less than like 0.6 or 0.5. And the credit cost is so much under control, except the MFI problem, which we'll talk separately. So if the bank is good, growth opportunity is there, asset quality is good, you can grow.
Mr. Vaidyanathan, while you mentioned that for the next few years you would be looking at a growth of 20%, the capital raise which you have done of 7,500 crores, are we to assume that for the next few years you will not be coming back to the market for capital raise because this capital is enough for that growth for over the next 2 to 3 years or so?
I think so, because after all, this is a large raise. One of the purposes of taking a large raise, to your earlier question, Sanjeev, that we were talking about, every year the bank is raising capital. I don't deny. But do you think I have a choice? Do you think anybody had a choice? It's a startup bank, and it has to grow to reach a particular level of return on equity. Till that time, it has raised capital. So for 3-4 years, we have in 5 years, we raised 5 rounds of capital in 5 years. But good news is that people are giving us capital. We have made ourselves attractive for investors enough for fresh people to look at the bank, see the model, see the economics, see the culture, see the tech, see the growth, see the deposit growth. So people are seeing all this, and fresh money is coming into the bank. So I'm really happy that the bank has been made attractive for fresh investors, and 5 years in a row. Now that we raise big capital, they will not come to the market for a foreseeable future.
And when you said that you're looking at improving your return on equity because that's what is the focus, is there a level that of return on equity that you are aiming at, and is there a path to that?
Of course. I'm glad you asked that question. It is the important thing. So when I start a company at 0, you reach 7. Now after 7, you're at 15. So we have to go. There's no question. And any good bank should be posting 15 plus return on equity, and should be, but there's no choice. You have to start somewhere. We start from 0. We'll touch 15. It has to go there. But path is like simple. We are already making good money on the lending side. We have good economics. Adjusted for risk also, we're making good money. We are losing money on liabilities because it's a new bank setting up branches on that, and credit cards. Both these businesses, every year they're losing lesser money than last year in a percentage sense, as a percentage of book.
And this 15% that you're targeting, is it next 2 to 3 years? Is that the timeline that you're looking at?
We don't put out very specific year-by-year guidance like that, stuff like that, because we are running a bank, and but directionally we're heading there.
Okay. I want to take one last question, Mr. Vaidyanathan, and that is on.
But if you think of all the even iconic institutions, like the well-known banks of India, every institution starts from 0. That's how every institution starts. So, but good news is bank is catching up very fast. Just to give you an idea of how powerful the machine is, our operating profit have now touched, last year has touched close to about 6,000 crores. It was less than 1,000 crores in 2019. It is 750 to be precise.
Yeah, I was looking at the presentation. It said what 6x, I think, between FY18 and now.
Yeah, 8x. 8x is the deposit growth. A deposit growth is 8x.
Got it. Well, okay, let me ask you one last question, and this is the MFI point, because that's something that's been mentioned a few times in this conversation. I wanted to get a sense. A lot of expectation was that by Q4 you would have seen the end of the problem, and Q1 you would have seen some amount of normalization. Now I know this is pre-results, so you can't really give specific guidance, but are we to expect that before the second quarter you would have most of the system would have gotten over this MFI hangover? Because the reason I'm bringing this up is because some state governments have also taken certain actions which are sort of prejudicial to the broader microfinance segment.
So because results are on the corner, I'll take nothing. So take none of my comments as this quarter's comment. Let's stick to what prior comments.
Yeah.
We have already guided that Q4 will be will be the highest credit cost because of MFI. It will peak, and we said that Q1, Q2, Q3, Q4 should come down. And these are 2-year loans. Already 1 year has gone by. We stick with what we said. Rest wait for the results to come.
All right, Mr. Vaidyanathan, thank you so much for taking time out and talking to us, sir. Pleasure talking to you.
Thank you. But on a closing note, I must say, since the agenda of the discussion was more about the capital raise, I want to just say that this is a very momentous occasion.
Yes.
To raise that kind of capital in the global environment the way it is, with all kind of crisis and chaos all over the place, for investors to give this kind of capital to the bank is really, we made the bank an attractive place, and I'm very confident we'll live up to it.